Alright guys, what's going on? This is Ryan, aka Canteringclark with BlockRoots, and it is Saturday, March 7th. So before we get into the video, alright, as with all of our other videos, as long as you are a subscriber to the YouTube channel, if you leave a comment below, you'll be entered in to win $100 in Bitcoin. And actually at the end of this video, we'll be doing the lottery to pick from the last video who's going to win that $100. So the purpose of this video is not going to be to get into some type of diatribe about what's going on in markets as a whole and what's going on with the coronavirus and where we think Bitcoin's going to be, post-halving. The purpose of this video is going to be largely educational. I want to drive home an important point that is more or less a cardinal rule in trading and in investing, more so in trading. It's one of the prevailing points that we try to drive home on the BlockRoots platform, and this is that certain areas of the market bring in more participants. Okay, so there are certain areas within market structure, for example, that bring upon more participation as a whole, and then there are areas where you have less participation. If you want to think a bit about this as there are certain areas in the chart where the whales are likely to be more involved, and there are certain areas of the chart where they are not likely to be involved, and it's more of this kind of small hands playing against each other. All right, so this is going to apply to what has taken place recently and sort of help you hopefully understand why 9,500 is a really important area for us right now, and how my default bias, at least, is not to be longing into this area, and rather it is to be initially looking for a short opportunity. Now, this doesn't mean that I am not bullish on Bitcoin in the next 6 months. It just means that as a trader, I do have certain standards that I operate by, and that I say, okay, when this situation is as it is right now, I am not going to be geared towards looking for the long still. I have to adapt to what the market is giving me. All right. And as a technical trader, this is some type of technical standard that I'm holding the market to, or rather I'm holding myself to, and saying, okay, when this happens, especially on the higher time frame, my default bias has to shift. All right, I have to be looking for, in this case, fading a rally versus continuing to long, assuming that it's a beginning of a bullish leg upward. All right, and sort of discounting the fact that something major has changed. And this type of change that we actually saw is not something I'd say is major, but it is in my view significant enough, right, to make this sort of general assumption that the first move up into it is worth fading rather than buying. So before we get into this and before we look at the actual chart, let's just do some artwork. Okay, so let's create some artwork rather. I don't know if that came out right. So imagine that this is a 6-month trend. Okay, so this is sort of a macro leg up. And, there's not a strict standard when it comes to what macro means, okay, what higher time frame entails. Some traders, when they're talking about trading on the higher time frame, they're looking at a 4-hour chart. Some traders are looking at, a weekly chart. But if you look at this and assume that this took place over 6 months, okay, higher low, higher high, okay, just a pattern that is painting a clear upward trend, all right. Now, this is kind of a crude example of what the trend would look like over 6 months. As you can imagine, there are probably multiple times where within this, you have little legs back and forth where, it looks like on the lower time frame, we're either moving down, okay, or moving up, right? Trends within trends, right? This is sort of like the fractal nature of markets. Trends are like little Russian dolls, right? Within each larger doll, there's a smaller doll, and then a smaller doll, and it's just all the way down you have these trends. And then we'll start getting from macro trends down to, who knows, string theory. Is it a particle or is it a wave? It's both. So within this, you have smaller term trends, and you have different types of participation within these trends. Okay, so what happens from here to here, okay, is maybe not necessarily as important when it comes to what happens within these trends to the traders that are strictly trading based on higher time frame levels. Okay, so I'm talking about maybe position traders, longer term investors, longer term swing traders. After they put on a position, and let's say we have a major pullback on the higher time frame, they're going to be looking to buy dips. Okay, if we assume that this was this trend, so let's redraw this. Let's imagine that we've worked within a higher time frame accumulation zone. Okay, and this is over the course of 6 months, and then bang, we broke out of this range, and now this is the first leg up and the first pullback. Okay, Now, major market structure has changed, and now let's just imagine that this is the 6-month trend that followed. Major market structure has changed right here, okay? And we're likely to see more participation come into the market because now at this point, there is a major trend change, and the stipulations for maybe these longer term investors or swing traders or position traders is to get involved at major breaks like this. Okay, they're not necessarily concerned with what goes on between here. Okay, the stipulation or trigger, okay, or rather their entry criteria is based on higher time frame market structure. Okay, so bang, you have a break of that. All right, and if you're a longer term trader and this is your criteria, you're not really concerned with what goes on within these small levels right here. Okay, so what goes on within this 30-minute range, you're not necessarily concerned with that or consumed by that. You're just looking for something that has semblance of a pullback for you to get back into this trend, or rather enter if you have not entered in a breakout, any type of slowing down of the bus you're willing to jump on. So the traders that were trading down here and trading in this range down here, if their priority is still to look to fade moves, they are now fading from this point to this point. Okay, if they have entered in after, let's redraw that. So let's say that this was the final movement before the break. Okay, if they were fading down here, fading up here is much different at this point. Okay, they are likely fading a larger mass of participants. Okay, because now we've drawn in more participation. Now you are no longer trading against the small fish within these micro ranges. Now you've brought a whole level of different participation into the market. And as I've said before, you're trying to essentially hold back the tide with a broom. All right, so when major trend changes occur, when we have major changes in market structure, let's say it's something as simple as this. So here's our 6-month trend on the way up. Okay, and we have a double top, loss of market structure, and now let's say that we're down below here. Okay, so let's say that, well, we'll use this one as the first example. Now, for the traders that were looking to get involved in pullbacks, and they were only participating in this, in a very infrequent manner, they're position traders or swing traders, they're getting on over time, they're not concerned or consumed by any type of minutia that goes on between here. To them, this break is much more significant because they're only trading based on certain signals. And if there's some type of trend following system, some type of CTA, all they have are these very broad, kind of robust default signals that are, they're not necessarily something that you need to pay attention to by the second. They don't need to be sitting in front of a chart to take this. They just know, okay, major change has occurred, market structure has broken. My default bias now is, in this case, maybe to the short side. All right. So when things change on the higher time frame, you're bringing in a whole different level of participation. All right. You're trading against, okay, and in this case, the first break, you're trading against a lot more, in this case, other people within this game and in this environment. You're not trading against the small traders that you were trading right here. At this point, you're trading against the larger traders that might be looking to enter in at the first pullback, okay, after a change in market structure. So the point is that when you're moving within these ranges, okay, like this or like this, all right, or these little ranges, maybe right here, or right here, right here, okay, these things that might be structurally, they have some type of semblance of a range on a lower time frame structure. When you're trading within those, you're trading against smaller participants, okay, who are, maybe they're scalping, okay, they're trading on a lower time frame. They're not really concerned with the fact that maybe price is in a downtrend or an uptrend on the macro scale. They're just trying to take advantage of maybe some type of mean reversion or noise on the lower time frame. All right, whereas once you have a major trend change, okay, those participants on the lower time frame need to take into consideration that at these key areas, there's going to be a whole different level of participation. So trading within a range up here is different if you're trading in a range approaching now a first break of market structure. All right. So since there are larger participants that are looking at this, you should try to move with the masses in this case. All right. Or you should at least take this into special consideration because you're not going to hold this back on your own. All right. You're, not to marginalize anybody, but you're trading again against maybe institutions, maybe asset managers who look at this now as the most important thing, who look at this break of market structure as the most important thing because we've been in this sort of uptrend for the last 2 months. Okay. Now, it's not to say that this cannot resume. It's just that when you're looking at this location right here, when you're trading in relative proximity to it, you have to just assume that you're trading against bigger people. Okay, just to humble yourself, assume that you're trading against bigger people, and there's more at stake here than just, you know, price coming down here and this moving up as if it was any other trend, as if it was like this or this or this. It's not the case, because this is a major signal to, again, those position traders, swing traders, and so forth, all right, who might have more on the line and have more firepower. So really that's what it's about. It's about firepower, okay? And you're a minnow compared to a whale at that point. So that's why 9,500 is so important to me, all right? It's so important to me because at this point, this is something that would fall under that criteria of a change of market structure, okay? And until this breaks, it has to be assumed that this would be a better short opportunity than a long opportunity. All right. And it's not to say that that's going to be the case, right? We could very well see price treat this as support, move back up, okay, regain this and move its way through. All right. But if we're trading on balance of probabilities and we're taking this into consideration, and we understand that, yes, there are sometimes these anomalous events that occur where you do lose support and then you just nuke your way right back through it, that's fine. All right. But you can't trade thinking that on a large sample is going to be the prevailing case, okay, or that's going to be the dominant piece of evidence that every time major market structure breaks, okay, it just goes on to resume as if that never occurred. Okay. So I wanted to keep this as brief as possible. All right. And the point of this is, you've heard this many times before, the trend is your friend, right? The trend is your friend because more than likely you're not the whale in the ocean. All right. And when the major trend changes, okay, you change the sort of migration patterns of those larger whales. All right. Now they're saying, okay, my priority is not to look at what's going on in the 5-minute time frame. That's just not something that I could do if I'm trying to put on a larger position, if I'm trying to execute over a longer period of time. I don't really care about what's going on in the larger time frame. But when I see that this occurs, I know that, all right, my bias is now to put asks up here maybe. I'm looking to short rallies. And the idea is that whether or not they're entering in over here or over here, it's just that they're potentially entering in, and you're going to be trying to fade that much stronger of an opposing force. All right. When this occurs, they are saying fade rallies. So they might fade this. They might be fading this. They might be fading this. So you're just going against, at that point, a much different type of current. All right. So just keep that in mind. And that's why they say the trend is your friend. Unless you become such a large mover of markets that you can begin to create the trend, you should try to trade with this sort of flow. So now that that is hopefully understood, all right, again, as we talked about on the BlockRoots channel, we mentioned how we would likely see a pop up. I even shared this morning, I said that the long opportunity, I was looking for the short opportunity, the pop up that ends up coming back down here. But when you say that there is a short opportunity setting up and you're talking about it requiring price move up, $100, $200, well then of course that implies that there's a long opportunity as well. And while I don't try to get myself in every single trade, it doesn't mean that that trade is not worth taking by someone else, okay? Again, when you have this type of setup where you have this series of higher lows in this case, you do potentially have that sort of stop cascade in the making, because you just have what are progressively likely higher and higher clusters of stops. But again, when you have something that looks as clean like this, it does look like a trap, but it is worth, sometimes throwing a little bit of money at if you think that the long opportunity is worth taking in that case. So let's pick the winner of last week's video. Okay, so let's pull this over here. All right, URL for last week's video. Get YouTube comments. All right, and the lucky winner is, we had 75 commenters, and we're going to pick a lucky winner. And it is, come on, slowly, Deshaun Spalovich. All right, so we'll contact you. Congratulations, you won $100 in Bitcoin. And again, hopefully this was clear and concise enough to drive home this point that when there are changes in higher time frame structure, you should prioritize a bit differently. All right, at least when you consider that this is the first time reapproaching this level. So first time after a loss of a major level, reapproaching this level. This is your first opportunity, and for many they're going to be assuming the same, and at that point just remember you're trying to move against a much larger mass of people. All right, versus if this, again, what my assumptions are, and I laid this out, I think that we're going to form some type of range. All right, I think that we form some type of range. I'd be looking actually to long again at a break of this structure, but again under the same type of criteria that I laid out before. Okay, I've laid this out countless times before, where I need to see that, after this was probed 3 times, essentially, I need to see that this area is aggressively sold and then regained. So aggressively sold down here and then regained, and that'll give me some sort of confidence, rather conviction, that now that we've trapped enough down here that are considering this an oh fuck zone, excuse me, that if we broke that it's going to just lead to further downside, I'd be looking to, on behalf of them, ride that squeeze that they provide in the case that we regain market structure after, again, seeing some type of heavy selling below this level. And that heavy selling, really what that is I'm looking at delta and I'm paying attention to the footprint chart to see that we have a lot of committing down there. Okay, so that's all it really is. It's when one side is getting really committed and the impression that we're going to carry through, and then not carrying through leaves them on the wrong side of the market temporarily. Right? It's not that they can't be early and that the market might recorrect and move back down towards that area and resolve in that direction, but it's just that over time I like to take those type of trades because more often than not I end up on the right side by doing that. So right now we're back down towards the top side of this range. If you're looking at this as a composite range, we're back down against the top side, not really seeing a very convincing rejection, okay, rather convincing bounce at the top side, but again, I haven't been really paying attention to this since I've been making this video, so we shall see. Again, wouldn't be surprised, rather anticipating, that we come down to test these lows again. All right, there'll be a good amount of action likely between, but as I've said plenty of times before, the midpoint of the range is not necessarily somewhere that I like to get involved unless we've just really been rejected from one side very strongly, because it's not as easy to define your risk, and there's less conviction, I'd say, for someone who will trade mean reversions within range. I'd rather deal within the range extremes, or rather with the range extremes, than where most of the volume occurs, because if you consider that this is just one larger volume profile, what you'll see is that as we sort of move back and forth, this will be pretty balanced. So it'll be pretty balanced, and the balanced portion, the most balanced portion, the area rather where there's the highest amount of concentration, point of control, that just means that that's the fairest value area. Okay, so where buyers and sellers are in most agreement, okay, there's less conviction that when they're agreeing this much that we're likely to move in any one direction over the other. Whereas when you have price approaching a value area low, okay, and a value area high after it's been in a relatively balanced state, you could say though, well, it's moving away from balance, sort of like in any type of asset that's being overpriced. Well, after it moves away from fair value, we'll typically see that the auction pressure will begin to decrease and that this will find its way back down to value. The same can be said with a move to the downside. Just imagine that you have fair value for iPhones up here. Okay, so fair value is, let's say, $1,000, which is ridiculous because that's what they cost. All right, there's your iPhone. You drop the iPhone $500. How long do you think that it's going to remain not bid before moving back up when that supply is essentially auctioned for? So that's that, guys. All right, try to keep this short and sweet. Congratulations. All right, again let me just pull that up. Where do we go? Congratulations to Deshaun Spalovic. All right, have a great evening, guys.